All right, so yeah, I will leave the Trend Rider again in the background because there's so many people who have Trend Rider related questions as well. So yeah, the first pair, and yeah, we can start here with the Euro-US dollar actually. Cool, and I see there are a lot of questions in general, and I will go through all the questions one by one. If your question doesn't get answered right away, just be patient, I will get to that. All right, so I think you can see now my charts. So Euro-US dollar. By the way, if you're requesting a chart, it would always be nice if you have a question or a time frame or what is your trade idea. That makes it a little bit easier to talk about. So the Euro-US dollar, obviously, with a strong US dollar, we are now seeing the breakout to the downside. There are many interesting Euro-related setups actually. So we can just start with this one and then go into specifics later. I don't see anything that is tradable on the Euro-US dollar. Why I don't like it so much is to the downside, at least. How do you trade a downside breakout? There are so many levels in the way. You can see that. Whoops. So there are so many levels here in the way to the downside that it is very hard to get in a decent take profit order. You can see when we zoom out, yeah, it gets a little bit better, not too much. Here's a very important supply zone, seems to be in this level. So yeah, the market could run into a lot of problems here in this area. So I'm not really keen on trading the Euro-US dollar. We do have better US pairs, we have better Euro pairs. So for example, the Euro-Swedish krona is one that I'm looking at right now. And here we have a much more interesting chart right now. And I am looking for a short, a potential short, obviously. It's still quite early. You can see the background currently is still green. We don't have anything interesting on the trend rider momentum finder. Let's zoom out a bit to see where we are in the bigger picture. So we came close to this very important area. So here there seems to be some type of supply in here. We came a little bit short of the top. That's okay for now. Yeah, so what are we going to do? We are waiting for a downside potential setup. Where do we, how do you trade now such a market that is going up and up and up? First of all, you need to be, you need to make sure that you are waiting for the market to really shift. Looking at this right here, you can see that the market still keeps making higher highs. So that's very, very important, higher lows and higher highs as well. So that's the first and most important observation that we can make here. The market in this phase is still going up, higher highs and higher lows. So we really need to make sure we wait long enough before we can get into a trade. Where do I see? So the first is here, but you can see my price alert is set here a little bit lower. I really want to see that the market is not trading at the top anymore. I want to see that the market is really showing us some bearish strength, and this is always a trade-off. The later, obviously, you will enter, the later or the more confirmation you have that the market is really rolling over. At the same time, you have to acknowledge that the reward to risk ratio will probably be smaller the later you enter, because the market has already moved away from the top. So this is the trade-off. That's the trade-off that generally exists in trading between early versus late entry, and reward to risk ratio and profit potential. And yeah, so this is very interesting. Euro Swedish krona, also the Euro Swissy right now. But here I want to check a little bit of a higher time frame. Yeah, that's not, I got asked about this pin bar. Yeah. Is this a good pin bar? I'm not too sure. First of all, this might be a good pin bar or whatever you want to call that. But what are you trading into? You are trading into a lot of problems. So the only, this is the only window that I see here for the short term. You're trading a short into a previous low, but you can see the market is quite volatile. This is a very, very small profit window, so I would not trade that right now. Euro Swedish krona looks much more interesting compared to the Euro Swissy. While we're at the Swissy, let's take a look at the US dollar Swiss franc here. Very, very classic trap. Well, a trap goes two ways, obviously. First, everybody, I hope nobody took this pin bar here. This is not a signal, this is a trap. First of all, it set the pin bar, and we stopped right here at this support and resistance area. We never broke this area. Very, very clear. That's very obvious that we never broke it. And now everybody who is positioned short too early, gets now squeezed on the other side. So this is well, it is what you get, obviously. There was never a signal that the market is rolling over. The trend rider confirms it. We are still in a more bullish than a bearish phase, and we have never broken this trend structure here. So as long as the market is not breaking previous lows and highs, there is nothing to get excited about if you're looking for a new trend. As long as the market has not broken a previous support and resistance area, you not get into a trade. And then if you do, that's what you get. All right. Question. All right, cool. So I will go through the questions. There are a lot of questions. If you have any questions or trading related queries, let me know. So the US dollar yen is a very, very interesting. I was waiting for a breakout. The breakout happened now once again. You can see that the last 12-hour candle broke out. We have confirmation from the trend finder. This one closed green. And yeah, we have broken out now to the upside. So very interesting setup here. We do have a few levels obviously on the way up that might cause problems. The first big one that I see is here. So we still have a little bit of wiggle room. The market can develop. If you want to take it one step further, this is the next one. It's a supply zone here, the start of this big move. So another very interesting one. So yeah, I'm in the US dollar Japanese yen right now. I took the long here, and let's see what happens. If you haven't taken it, don't view this as a trading signal. This is not a signal. If you are not in, you're way too late. This will throw off your reward to risk ratio, and you will have entered a bad trade if you enter now. So there are many questions about the US dollar Mexican. All right, so first of all, what time frame do we use? And this is a very important concept, obviously, because the time frame you choose determines, a lot about how you approach this trade, obviously. So I have the 12-hour, the 4-hour, and the 2-hour here. What I want to do here is I want to look for the cleanest technicals, where we have the best amount, we have the fewest amount of candles, while still having the patterns in general. So the 12-hour is here obviously my choice. The 4-hour is too stretched out. The patterns take too long, too many candles in the pattern. Although the technicals are quite obvious, we have a strong resistance here and here. I think we can stick to the 12-hour here, because the pattern is very obvious. The support and resistance is obvious, and obviously if we are on a 12-hour, we have much less management to do compared to the 4-hour. So that's easier, less work involved, less checking, and that is then why I choose higher time frames when I can. So if you have the same setup on the 4-hour and on the 12-hour, there's really no point in trading it on the 4-hour. Just stick to the 12-hour. Here we haven't had the confirmed breakout yet. I would wait until this candle closes, which is 4 hours, and then reevaluate the situation. But so far it looks good. The US dollar obviously is showing strength across the board. Yeah, so the US dollar still has a bit of room here to the upside until we reach this never 97.6. So looks good for now, looks very strong. We do have some room here that could, yeah, price could continue higher. That wouldn't be a very unlikely scenario. Shingi, where do you see a bullish flag on the US dollar Mexican? Connie, do you have any specific questions regarding the US dollar Mexican? Yeah, okay, gold we will take a look at later. Okay, so it seems cool. So those are quite interesting. Well, we have a few more interesting ones, obviously. There's quite a few lining up, by the way. Yeah, British pound, Japanese yen, British pound, Swissy, whatever you want to trade. Still in a neutral phase. You can see the background of the trend rider is white. The momentum finder is still gray. I expect that this will turn red together with this one if we see a strong bullish breakout. Otherwise, yeah, it's really, there's no point in getting in a trade right now. Crude oil, squeezing and squeezing and squeezing. So yeah, looks classic. So this market is really, really giving us a hard time. We are in this channel here where we see, well, it's not a clear channel, but the main points about this channel is that we are seeing slightly higher highs, which now seem to be shifting to lower highs. But the low area, the support hasn't been broken yet. So, well, we are still in a somewhat neutral phase. So as long as the market is really still trading in this area, you probably can expect a lot of whipsaw. Yeah. Inverted head and shoulder. Yeah, I think this one got, yeah, it's not a nice head and shoulder anymore. Why? Because the right shoulder is really, really nasty. You had the neckline here in this area, but it got violated now a few times. The right shoulder is very stretched out. Not good technicals anymore on the right shoulder, but yeah. The general idea of the head and shoulders anyway, if you trade a breakout to the upside. So if the market breaks into 56, you could still think about getting into a long position. Right now, it looks like we are trading on the low end of this support area. Let's go to the lower time frames. Yeah, and you can see this is really nasty. So the price action, we can see some swings, but it's not very beautiful. So I'm not going to drop lower on the time frames. Yeah, right now I would suggest waiting here a little bit longer. This is not a clear market right now, and that's a very, very important point. If you say, or if you call yourself a technical trader, you trade patterns, then you really, really need to make sure that your charts also provide or respect the technicals. If you see a market here where it's all over the place, there's a big support noise zone, the market is making lower highs. On the right side here, we are still making higher highs, so we are somewhere in a small range. Without any patterns, without any technicals, then stay away from such a market. Usually it doesn't offer good trading opportunities. So if you're a technical trader, you need to make sure that you are looking at technical questions. So there's a question about somebody being confused with multi-time frame analysis. And I really don't recommend multi-time frame analysis if you somehow try to line up your daily 1 hour and the 4 hour. First of all, why are you doing this? I don't understand what purpose this has or what needs to be accomplished with that, because the daily, the 4 hour and the 1 hour, they have absolutely nothing in common. You are using different multipliers. You are using a 6 multiplier from the daily to the 4 hour. You are using a 4 times multiplier from the 4 hour to the 1 hour. The time frames just have nothing aligned with each other. You cannot somehow try to line up those random time frames. I really, really would recommend stop doing this multi-time frame analysis, because it doesn't make any sense if you think about it logically the 4-hour and the daily, they are completely different intervals compared to the 4-hour and the 1-hour. So really, yeah, that's really not good. What I do instead, I trade directly on my time frames. So for example, let's say I want to trade a 4-hour on the Swiss yen, for example. Then I will just zoom out, and you get the same idea. I'm on 4-hour. I don't need to go to the daily to get the idea of the daily. What will the daily show me? That there was a downtrend here, then we had a small uptrend, we had a downtrend, and now we are in this range. That's everything that you will get from the daily anyway. What you want from the daily is maybe big levels, where's the next support and resistance, where are important supply and demand areas. That's what you want to get from a higher time frame. But then you stay on the lower time frame to time your entry. And instead of zooming in and zooming out and jumping around time frames, this will never work. Just stay on the lower time frame, look for a good pattern, look for a signal there, make sure that you're not overseeing anything by zooming out a few times a day, and then that's everything you need. So I trade directly on the 2-hour, I trade directly on the 4-hour, the daily, the 12-hour, and I change between the time frames based on the patterns. When I see that the 4-hour has very nice technicals, but the 2-hour is too erratic and the daily is too slow, then I will stay on the 4-hour, and that's how I choose my time frames. Sorry for the long rant. Alan, are you using the ATR? No, I'm not. Well, I'm not using the ATR, but I adjust my stop loss based on the momentum and the volatility. So if I trade a Forex pair where you have a lot of swings, where the candles are quite big, then I will use a little bit of a wider stop loss. So I don't specifically use the ATR, but I use the concept of the ATR. So yeah, I use volatility and momentum-based stops. So I'm going through all the questions right now. Keep asking the questions. I will go through them, and I will eventually get to yours. Esther, what's the question? What's the difference between the red and green candles and MetaTrader? I will release more info on that soon. Mainly, the candles are color-coded based on the volume here, but more on that a little bit later. However, you don't absolutely need that. The core components of the trend rider are the same as here. You can see those are the most important ones: the background color and the momentum finder, together with the channel and the general patterns. Yeah, I'm glad to hear that you like the trend rider. By the way, there are a lot of people asking me, the trend rider, this is the indicator you can see in this background. Yes, you can use it on MetaTrader 4. You can use it also, this is tradingview.com, obviously. And you can use the trend rider on the free TradingView plan as well. So there's no need for Pro or Pro Plus. Once you have bought the trend rider license, just send me an email with your TradingView username and I will give you access. So Liam, your question, maybe you can elaborate a little bit more. I didn't quite get it. Barry, regarding the DAX, sure, happy to take a look. Any specific time frame? What percent of your account do you risk on a trade? So this changed, what it should change, and this will usually change for most people. The higher or the larger your trading account, the smaller the risk usually will be. When I started out, I had a very small account, and naturally you will have to take more risks to make sure, or to have even a slight chance of growing it. Of course, what will happen most likely that you will also have huge losers and occasional account blowups. That's just the way it is when you increase the risk. But the larger the account is, the smaller the position size, and then also it does sound contradictory, but it is much easier to trade with a higher account or with a larger account. When you have 50,000 or 100,000 or 200,000, then one good trade is or can already be everything you need for a month or a week. So you can see how different this will be. Instead of having to chase many trades every week. When you have a big account, you can really only trade one time a week or two, or one time a month even. Yeah, that's a very big impact most traders don't realize. Phil, what is the difference between supply and demand and support and resistance? That's a very good question, and yeah, let me take a look. And by the way, this is a chart that I am looking at. British pound Swissy has a very good pattern. Not too confident yet. I want to see one more push from the bears, but yeah, that's one thing that I'm looking at. All right, so what is the difference between support and resistance and supply and demand? So let's start with the obvious. Support and resistance are levels on your charts where you have repeatedly seen a reversal and a bounce from. So for example, here is a very strong support and resistance area. You can see it has been used as resistance from underneath. We broke above it, retested it as support. Very clear support and resistance level. Where do we have another one? We seem to be having one more here. Support, resistance. Here we come shy of it, but here support. So yeah, so support and resistance are levels where you see a direct reaction and usually leading to a bounce or reversal. And what is a supply and demand? A supply and demand area, for me at least, they mark the origins of very strong trends or explosive movements. So for example, this is the longest candle here on this chart, here on the left-hand side. Here, this is the longest candle that we can see in the whole chart. So, and look at this, before that, nothing happened. The market was just dead. There was one little doji candle, and then the market in the next candle just sold off significantly. It doesn't matter if this is news or whatever. It only matters that something happened here at the origin of this candle, and going forward, you can see we came in from a strong uptrend, we dipped into this twice, and now it seems like we are selling off again. So supply and demand, for me, they really mark the origins of very strong price moves. So here, for example, there seems to be an interesting level once again. And here in this case, a supply and demand actually led to the creation of a support level or resistance in this case. So here is probably the second largest candle in the whole chart context. Oops, let me get this away. So here is the second largest candle probably in this chart. You can see a strong drop. So there must have been something here where a lot of sellers suddenly moved into the market and then caused the price to drop here. And the next time the market comes back in here 1, 2, 3, 4 times, each time it reacts the same way again, picks up new selling interest. So that's the difference between supply and demand, support and resistance. So the supply and demand are really the origins of big moves. I hope that helped, Phil. All right, so let's take a look now at gold. And there are a lot of questions. If you have any questions, you can post them in the chat and I will go through them one by one. Phil, did that make things clearer or? So what is gold doing? Yeah, so gold, tricky. So first of all, we have to acknowledge the most important finding. And this is that the market is still in a technical uptrend. Higher highs, higher lows, and there's no question about that. So we have to start here. The market is still technically in an uptrend as long as the market isn't violating this structure. What now can happen? First of all, we could break below this area, which is 1306. Then this will most likely cause a change from a bull to a bear market, at least for the foreseeable future, until we hit the next bottom. Or we break out to the top. 1330 is the resistance to the top. And if this breaks, we can expect maybe a move into the previous resistance that hasn't been touched yet. So right now, I would say the market is undecided. We are below a high and above a low, and this is always showing us a range market behavior, but in an overall uptrend here, obviously. So yeah, we just have to wait it out. I really, as I always say, don't recommend trading in those areas when we are stuck between a high and a low, and wait for a clear breakout. Those are usually better trading opportunities. So that's my take on gold. GBP CAD. Wow, that's a nasty shot. All right, so let's go to the lower time frame. There's obviously nothing on the higher time frames. Yeah, I don't really see anything. There's no technical pattern here, so whoever asking me about this one, well, it's really tough to make any sense of this chart. So I would, in my because I talk a lot about market selection, so I would personally never attempt to trade this market right now. I traded it here, as you saw in the beginning, when I pulled the chart up. I traded it here because we had nice technicals. You can see how it looked back then. Where is the replay? So this is where I traded the British pound and the CAD actually. It looked like this. And here we can clearly see how beautiful the technicals are. We are trading at a previous resistance here. We have a 1, 2, 3, 4 touch top with failed breakouts. We have a very good support level defined. We're coming from an uptrend and now we're rolling over with strong selling momentum. So here everything fits together. It doesn't make a lot of sense. But right now, absolutely nothing. And again, do you call yourself a technical trader? Then you must wait for technical patterns. And right now, there's absolutely nothing. There was maybe a bullish breakout here after a small inverse head and shoulders. But right now, here, there's nothing going on. We are just whipping around. And I really, really don't recommend trading this. If you are there, then this is probably not the best trade that you can find right now. Casiano, I'm not a day trader, so I cannot really answer this. Moritz would be the day trader here. Ganji, Euro Kiwi. Two hour. No, very clear. So I was waiting for a potential short on the Euro Kiwi too. I saw that it broke lower, but it wasn't. Yeah, you can see we never had any signs. The background never changed to red. The trend rider momentum never gave us a red signal. So you are still trading in a range market. This is not good. I would not recommend trading this. It's very, very high volatility. Uncertainty is very high in this market. So not a good pattern here, and no confirmation from the trend rider. A good example of how the trend rider will keep you out of trouble often. Which pair do you think respects technicals and patterns the most, and which is the best for beginners? The unfortunate answer is that every week it will change. I know this is not the answer you would like to hear, but it is the way it is. Every week, or well, let's take a look at the Euro US dollar, for example, or any market for that matter. There will be weeks where the Euro US dollar will perform absolutely beautiful. It will respect all its support and resistance. It will be a very, very technical chart. It will be easy to trade. It will be super nice to spot the trading opportunities. But then there will be other periods where it is just a nasty market, where there's no direction. It is going up and down. You're whipped around. There's a lot of uncertainty, a lot of volatility, and therefore you cannot trade the same pairs every week. Here, for example, the market was in a nasty sideways consolidation for, this is the 2-hour chart, so it was a few days the most, but still, if you try to trade a market during such a phase where there's no technical responsibility, well, what's the word? It doesn't really respect or respond to technical analysis, then you need to stay away from this market for a few days until you can clearly see again that the market is coming back to respecting its support and resistance. You have patterns to trade, you have a trend, you have momentum. And this is something that many traders overlook. They just think, okay, I just trade the majors. The majors, they seem to be easy to trade. That's completely wrong. It has nothing to do with how trading works. And that's why here on the right hand side you see a list of 30 forex pairs, 35 maybe, and every week I will go through each forex pair on all the time frames one by one. I will sort out the ones that are interesting to trade. I will take out the ones that are not interesting to trade or that don't have good technical, they don't respond to technicals right now. And that's how I build my watch list week after week. Every week the pairs that they analyze and I follow will change, and this is a very important concept. If you are a technical trader, this is a very important step you cannot skip. You need to make sure you trade the charts that are that just make sense and you don't end up forcing trades. That's very important, and that's one thing that I really stress a lot in my course as well when I help my students. It is very easy to learn technical analysis and the patterns and how to time entries, but the hard part is really which pairs do you trade every week? How do you find good ones? What are the bad ones? Which can you trade? Which should you not trade? And then also what happens is then there are weeks where you have many euro related setups, and there are other weeks where you have more British pound or more US dollar related setups, because right now the US dollar is on a move. And then there are the problems of correlation, and what do you do then? So this is one thing that I really stress a lot with my students. Every week I show them what are the setups that I want to trade, what are the good forex pairs, and how do you find the good ones every week. So this is one of the pillars in the course as well. If you are a student, then you will know how much video material there is. Do you draw your support and resistance new every week, or do you keep the old drawings? I will usually completely delete everything that is on my charts every Saturday, and I will start from scratch. That's a very good practice for me. It keeps me open-minded. I'm not blind to what last week was maybe the common theme in the markets. I really want to start fresh set of eyes, fresh ideas, and it doesn't take too long. And how far do you go back on your charts? That's then again the question that comes up. What I really want to do is when I draw support and resistance, we can just go on any chart. Let's say I want to trade 2-hour Euro Aussie for whatever reason. Then how do I draw my support resistance? It's very easy to completely get lost here and draw them everywhere. Here's a swing low, there's a swing high, here might be something, here is a gap that acted, but that's not really the point. What we want to really find out is where are we currently right now, and what are the next three is almost too much already. What are the 3 most important levels to price right now, to the upside and to the downside? And then I will go here and lower from current price. So this might be something, it's not too important. Here clearly the last swing low. Here we have a little demand area in this area. So here was the origin of this huge jump. And to the downside, I think those are the most important ones for the foreseeable future. That's very important. Here might be another one that we can pay attention to. And then here to the upside, we seem to have some type of level here. This is just a swing low. So here probably. And then you can see, okay, those are my levels. I don't need to go back too far. I don't need to zoom out too much. I don't need a higher time frame here really, because I can see everything that is important right now. And I really only need the next 1 or 2, 3 maximum support resistance levels on the way. The rest I can figure out once we get there. So don't get too crazy. Just take it what you need right now. Okay, more questions. What do I think about the British pound and the Kiwi on the 4 hour? And by the way, hello, Pablo. British pound, Kiwi, 4 hour. No, I don't see anything. I can see that we traded in this range. We had a breakout attempt which got rejected. We had, yeah, and now it's just a mess. This is generally a characteristic which you can try to avoid. When you see that the trending phases, they become shorter, then it's really not a good idea to trade such a market anymore. Because, yeah, just the move potential becomes smaller and smaller. So you can see uptrends and downtrends, they become smaller in size, shorter waves, and price action is just narrowing. So this is not a good one. There are much, much better setups right now in the market. Do you use more than one computer screen? Yeah, well, I have 2 screens for this current setup here, and then I have another computer where I run Windows. But this is my Mac computer where I have TradingView, and this is how I usually operate on my charts. I usually have it split 3-way for a single market. So this is usually going to be my daily on the left. So this is the daily. Whoops. Then I also have the same setup here on the 4 hour, and the 2 hour is usually here, just so that I can get an overview and where I can see, okay, where are the good technicals, which is the best time frame, and then I will narrow down. So yeah. Barry, I think you asked about the DAX, if I remember correctly. Let's take a look. Let's take this one. Yeah, so looks quite erratic. Yeah, I don't think we can make a lot of sense of this one right now. Yeah, so as a technical trader, this is really not a market that will get you excited, or you're seeing something that I'm not. Yeah, so this is just ugly. There's nothing here really to else say about this. Let's go to the higher time frame. Yeah, and even here, I heard people call this even an inverse head and shoulder, left shoulder, the head, and whatever this might be is the right shoulder. I don't really fully agree with that. The right shoulder is not very nice here. It's not generally how a right shoulder should look like. We can also not get in a trend line here. So yeah, this market is, yeah, it's tough. However, if you come to the conclusion when you look at a chart that it's not easy to make sense of, the most obvious decision should be then to just stay away from the chart, hopefully. If you cannot make of a chart, a sense of a chart within the first 30 seconds to 1 minute, then you should really stay away from the chart and wait until you can clearly see patterns. This is how technical analysis should really, really work. If you have to zoom in and out and think about it and wondering, is this a good one or not, then this is probably not a chart that you should trade, and you should keep going and search for a chart that makes more sense. Are you using intermarket analysis to get information about my trades? Not really. I do pay attention to what euro or the dollar is doing, but I don't look at other markets per se to confirm any entries. No, that's not what I do. How much history can you analyze with the trend rider? I don't think there's a limit. You can, at least as far as I know, in TradingView, you can go back for a very, very long time. My internet is now a little bit slow with the webinar, but yeah, if you have the trend writer on TradingView, you can use, yeah, you can go back as long as TradingView has data from. And by the way, here's the trend writer. I just want to show you for those who haven't seen it. It is also available on, or well, it works on your phone or on your tablet if you have the TradingView app. That's one nice thing. And if you want to enroll in my regular premium Forex and futures course, you will not get a trend writer, but you will get a discount with it. And the futures course, this is really the foundation, and yeah, everything that you need to know is in there. Just because I get asked. What is the best trade right now? Well, if you could answer that. Do you set your take profit at the next support resistance level? Yeah, I do that. I look for what is reasonable to expect. I don't want to get too conservative where I'm too close. So this is always going to be a problem if you trade something. Let's take a look at the US dollar Japanese yen. Okay, I should spell this correct. All right, my computer's a little bit slow, but that's okay. So I'm trading, I'm right now in the US dollar Swiss franc, Japanese yen long since here. So there are two options now for a take profit here. The first one, decent. The second one, a little bit more aggressive. Let's take a look at what would this do to our reward to risk ratio to make an educated decision if this is worthwhile. So the stop loss, as per the rules, is here underneath this support and resistance area. The first one would give you a reward to risk ratio of roughly 3.8, which is okay, which is pretty good actually. I am going for the longer one, 5.1, but 5.4 even, which is exceptional. But what I will do is I will take partial profits at the first and then scale out fully at the next one. So that is yeah, one thing that you can also do. It's not always black and white. You do have some wiggle room here. No, I don't try to close my trades before the weekend. I often have trades running over the weekend. I don't too often use Fibonacci's, no. Phil, do you have any specific question or don't quite understand? Connie, XCU. Is that copper? I'm pretty sure, yeah. That's a beautiful one. So you are short on the 4 hour. Let's take a look. Oh, wow. So that's a beautiful one. So did you take the aggressive entry here or the one where we closed here? Okay. 2754. Let me take a look. Oops, not the right one. Come on. Sorry, it's always lagging when I do the webinars. All right, yeah, so you choose this one, which is okay, understandable. Yeah, if we break through this one, then we have a, yeah, probably relatively easy time. What you could do, because copper can move a lot occasionally, where would the next area be? This one, I would not put too much emphasis on this one because it's just a single high, so that's not too important. Then you go lower. here, this seems to be an area of importance. It's also just above this demand area here. So this might be an area to look for additional take profits. You can see this is a significant difference. So the holding time will probably be, well, much, much higher. So that is something you need to factor in if this is something that you would like to explore. Is this already a decent reward to risk ratio? Then fine. Maybe take half of a position off here or 3/4 and have this one running and potentially get a huge reward to risk ratio. So yeah. Hope that helps. Thomas, is there webinar too with the premium course? No, we don't have a webinar, but where is it? 1 sec, let me take a look. Oh, that was the wrong part. And by the way, keep your questions coming. Did it answer it for you, Connie? So what do we have in the premium courses here? Rolf's watch list. And here you can see every week, February 8, February 1, January 26. Every week there is a new thread here. And what I do is I do my complete analysis of all the Forex pairs, all the time frames, and then I upload a video where I explain the setups, where do I want to get short, what do I see in the markets. And that's here compiled, all the setups step by step. And then during the week, we follow up here, we discuss them together. Our students or my students, they can post questions, I will review it, and so on and so forth. So that is part of the premium course. Oh yeah, so Pablo, I just saw your question. Yeah, you as you saw, so in the video you will get the different time frames here. Whatever the time frame I feel is the most interesting to trade, I will point it out and exactly map out the trading idea. Cool. Do you find the best entry point, or you just open the position immediately? Yeah, I prefer, or I always wait for a candle to close. So I avoid making decisions when the candle is still forming. This is sounds like a simple filter, but it's very, very effective because you can often avoid fake breakouts, failed breakouts, and this has helped me to reduce a lot of noise in my trading system. All right. Why do you think copper trade is beautiful? There are a few characteristics. What I look for is a trending structure, which we have. We have a previous resistance area where the market has turned from, which we can see here. We can see we have a failed breakout with a double top squeeze. We have a slowly reversing market with short momentum increasing. And those are all the little nuances and the little pieces to the puzzle that that I try to get across during the course as well in the premium models. That's then how you learn to analyze a market step by step. What is a good market? What is not a good market? What are the differences? How do you approach a trade? How do you map out a trade? And that's how I approach it. All right, I think we covered all the questions. Okay, there's one new one. Okay, US dollar, Turkish lira. So yeah, what do we see here? What should be the first reaction here? First of all, we can see that although the US dollar Turkish lira is going up a little bit, it's not going up as much as the US dollar suggests. So yeah, so that's the first one. However, at the same time, we can clearly see that the market is making higher lows. We are breaking through a previous high. Yeah, it's not the most beautiful chart because you cannot really find a pattern right now. There was a pattern in here, which is part, well, of my premium patterns that I trade. Right now, I don't think there's a new chance to find a trade if you have missed the first long one. If you are long, then I think it's reasonable to hold the trade, but the real signal has happened here on the breakout from this wedge here. Kai, will there be seminars in 2019? Yes, most likely there will be 2 seminars, one in Brazil and one in the Philippines. But I don't know when and the specifics and yeah, all that. When will you release the book? So I just got it today, a proof version of my physical book. So my book will come out as a physical print version. So that's good news. I will read this book one more time just to make sure I got all the errors. And then maybe in 1 week, 10 days, two weeks. So roughly in this area. But I decided to release it as a physical book, and now it's taking a little bit longer, but it's almost done. I have it here in my hands right now, actually. And I'm very, very satisfied, so this will be a very interesting one. I hope. All right. Any more questions? Anything else? Yeah, it will be Kindle and a physical book on Amazon. The cool thing is, I think I saw if you buy the Kindle, if you buy the print version, you will automatically get the Kindle version as well for free as an add-on. So apparently this is something you can do in Amazon, but no one does that. I will do that. I think it's nice. What is the worst mistake a trader could make? Oh, wow. Having wrong expectations is probably the starting point for almost everything that could go wrong. If you think that you can make a lot of money within the next 1, 2, or 3 years, yeah, this will completely destroy how you approach trading in general, because you have wrong idea of what trading actually is. You will look for the wrong systems. You will adjust the parameters in a wrong way. You will make wrong decisions about system hopping, position sizing, recovering from drawdowns, and so on and so forth. So if you have your expectations in check and you understand that this might take a lot longer than what you wish it would, then you are on a good path. If you think you can be rich within 1, 2, or 3 years, yeah, that's not going to work out. What's the name of your book? The book is called Technical Analysis Masterclass. Barry, well, we will have automatic strategies coming soon. The trend rider should not be automated. It's not meant, and the components of the trend rider are not meant to be automated. No, it's meant to be an add-on that helps you trade with confidence, get signals with confidence, stay in the trades with confidence, tailored around breakout trading and momentum trading. Oh, sorry, Joaquin. I don't measure pips at all. You cannot answer this question. How many pips do you look for in a trade? I look for as much as I can get from a market. So you can see the trend rider. So there are a few videos here as well on my YouTube as well, and you will see that it's mostly used as additional confluence for breakout and momentum and trend following trading. Yeah, it's not meant to be automated. All right, it is 8 p.m. I think I need to wrap it up. We are a little bit over time, but it was a very interesting and good questions again. As I said, next Monday there won't be a webinar, but it will be scheduled on next Wednesday. So yeah, next Wednesday. You're welcome, Esther. I hope you enjoyed this. And thank you for your time.